Okay, folks, welcome to Members Inner Circle, Thursday night stock market stock market live. We're going to switch things up a little bit. We're no longer going to do Thursday night stock charts live open to the public. It's really just going to be a members only show. And I'm probably going to do away with Sunday night stock market futures live open to the public as well. I'll release them in a day or so for replay, but I'm not seeing the value in doing that. So what we'll do is do a members inner circle, and we will certainly go over the same content, but it'll be a much smaller group. And of course, I'll answer any questions that you might have, any symbols you want me to review. Nothing has changed on that front. I'm looking for more, more engagement and more premium content. So that's the game plan. All right. So subject to change, but those are my thoughts at current. So what we're going to do tonight is go over the weekly charts as we know them right now. Thursday night, snapshot in time. How are we looking as we appear to close out the week, or as we near closing out the week? And we'll begin with a monthly chart of the yield curve. And the yield curve, this first week of February, this is the 2s versus 10s, is steepening so far on the month. Now, I don't think this is going to hold. I think that will ultimately, by the end of the month, we'll break down further here and begin to put in that second leg of a W formation. The ultimate oscillator is disagreeing with my assessment because it is moving up as well, holding the support level. Let's go to a weekly view really quick. See if I can divine anything from there. Go to a 10-year view, narrow this down a little bit. All right, so a filled, we'll drill down even further. 5-year view. No, it's not a filled canvas. We are very, very strong this week on the yield curve. We've taken out the prior week's highs. So at current, it is steepening. It's a respectable chart. Both lines on Stokes down below 50, and we know that rallies tend to fade. Let's see how we close out the week. We'll revisit this chart on Saturday when we do the week ahead commentary. Moving on, weekly view of the 20-year Treasury bond price. An outside reversal week so far. We have the jobs data coming out tomorrow morning. Perhaps that'll move the bond market up higher on weak jobs data. But at current, not pretty. Let's go to a daily view. We gapped up higher today. Not gapped up. Outside reversal day, though. We stopped dead right at the 143 mark. So we'll see what happens here. If we get a week report tomorrow, being Friday, expect a, hey Norris, why is Nugget going up the same time as UUP? Very good point, Norris. We're going to take a look at that. Very good point. Chips. A new weekly low, but we are off the lows of the week. Let's go to a daily view. Outside reversal day today. Volume was anemic. The dollar, huge move today, this week I should say. You don't get this often, especially after the prior week We had a very, very bearish reversal bar. That actually turned out to be a retest of the breakout point. So the dollar, what was the high? 26.64. What is the high this week? We are 2 cents off a new high, multi-year high for the dollar. Let's go to a daily view. Strong day. RSI is looking good. Stokes are looking good. This is actually a weekly chart. Sorry. This is mislabeled. Where's my daily chart? Here we go. Still, same deal. RSI is strong. Stokes are strong. We closed slightly off the highs of the day. We're trading above the 2 standard deviation Bollinger Band. We'll probably get a pullback fairly soon. But if we break out above this resistance level here, expect a short squeeze. And that could send the dollar right up into the 3rd standard deviation Bollinger Band. The volatility index, this is a daily chart. Let's go to the weekly. So far this week, a breakout point failure. We are poised to close back down below this breakout point. I'm suspicious of a rally in the VIX tomorrow, therefore bearish price action on the S&P 500, and then we close out the week above this current resistance level. Daily chart. A little bit of a tug of war today. Obviously the bears won out today. Take note of RSI finding support at the 50 mark. The other indicators are not impressive, but I get the feeling they are going to rally this tomorrow. And the jobs data will probably be the catalyst. The Dow Transports weekly chart. We are off the highs of the week, but still, I mean, you have to respect this chart. Weekly volume is poised to come in below average. Daily chart. Ooh, bearish reversal day today. And very close to a bearish engulfing day. Not quite though. But I think that I kind of mentioned this last night on Market Wrap, that we would need to see a pullback and a retest of the breakout point. That could be what's setting up here. We're shorting the market right now and nibbling. I don't want to get all, pounding the chest to the short side yet. That only serves to delude yourself into believing that your position can't be wrong. And we don't want to go down that path. So we'll take a critical eye of our own positions before we let ourselves get carried away. Down volume today was light. Moving on. The Dow Jones weekly chart. You don't see weeks like this often. Think about this. We broke down below and closed below the rising lower band of support on a weekly basis last week. What did we do this week? We just made new highs. It's insanity. 29,408. New all-time highs. It's absolute insanity. And we're doing it on volume that's meh. It's not great volume. Look at MACD histogram. Lower highs, lower highs. Man, this is not going to end well. Wrong click, sorry. Daily chart of the Dow. Hanging man formation. Often confused with a bullish reversal bar. The volume is very light. IWM, the small caps, weekly chart. Again, an amazing reversal week. No new high yet, but an amazing reversal week. No volume. Daily chart. Reversal day. On light volume. Now the S&P 500 is just another animal. Very similar to the Dow Jones, but even more powerful, to be honest. We broke down last week below the lower band of support because this is 500 stocks versus 30. That's why I say it's a far more powerful move. And we have new all-time highs this week. Volume is not coming in great. We're up nearly 3.75% on the week, yet volume just may meet the moving average by the end of the week. Go figure. Daily chart. Hanging man formation. Volume about average. Let's bring up the trip cues, of which we are shorting, and I want to talk about that for a moment. The whys, the why behind it, because it's important. You know, why are we, it could be argued, why are we fighting the market? And it's really a contrarian bet. All right, so take note of the price action. Yesterday, a filled candlestick. Today, a bullish reversal bar. Did we make a new daily high today? 232.5? No, we didn't. No new daily high. And volume was horrible. Simply horrible. And we are in the proximate vicinity of the 3rd standard deviation Bollinger Band and closed above the 2 standard deviation Bollinger Band. On this chart, going back to full month April of 19, you haven't seen this chart this extended. And what I also take into consideration are the number of bars. Each one of these bars is a bar, snapshot in time, and I measure the distance between the 50 period moving average and where we closed out. So we have, I omit the first bar with the 50-day moving averages because I want to take worst case. 1, 2, 3, 4, 5, 6 bars extended from the 50-day moving average. Now, if you go back and take a look at this chart, going back 5 years, I think I had it on 5 years before, because after that it gets a little bit messy. Let's see if I can enlarge this. Let's do this. That's better. Okay, here we are at current. We can go back 5 years. And it's not that this hasn't happened before, this type of price action relative to the Bollinger Bands. It has happened before. But it hasn't ended well. Most times. There could be exceptions, and I believe there are. Like back here in December of 19. But we are far more extended away from the 50-period moving average than where we were then. Much further. At that point in time, we hit the third standard deviation Bollinger Band, consolidated, then resumed the uptrend. We were only, at that time, 1 bar, 2 bar, 3 bars extended. We're 6 bars extended at current. Let's go back in time. Here, March 2019. We corrected down to the 20-period moving average. That would be a nice profit on our short if we were to get that. We were 1 bar, 2 bars, 3 bars extended. We are 6 bars extended from the 50-day moving average at current. Let's go back. All we're doing is back testing our logic. Here, August of 18. It didn't end well. We retraced, we broke the 20-period moving average, moved down to the rising 50-period moving average. And at that point in time when we broke, we were 1 bar, 2 bars, 3 bars extended. That's the magic number. So the point I'm trying to make here is that this rarely happens, what we're seeing right now on the trip Qs. And it doesn't mean we can't head higher, where this is a parabolic move higher. And it can move higher. We need to adjust our positions accordingly and get aggressive when we finally get the break, because it's going to get all sorts of ugly, all sorts of fast, really quick. Look at back here, May of 17. This ended horribly. We found support at the rising 50-period moving average. When we broke, we were, this is almost a full bar. 1 bar, 2 bars, 3 bars, just into the 4th bar, extended. It didn't end well. So I think you get my point of why we're doing what we're doing right now. And it may seem as though we're fighting the market. And I don't view it as that. I view it as having history on our side, and the probabilities of what's about to happen are very, very strong. And all I'm doing is jujitsu trading or judo trading, using the weight of the market kind of against it and just getting some good pricing. That's it. And we'll look to add more aggressively as the markets begin to break. So I wouldn't get aggressively short right now, but we're going to nibble, nibble, nibble and have a nice piece of a short position when ultimately we do break, which we will. The banks, great week for the banks, but this is no shock. Yields pressed higher, the banks broke out. Where's my annotated chart? All right, something happened to it. Emerging markets. Weekly chart, huge move. All of a sudden, coronavirus isn't a problem for the Chinese anymore. So it was risk on back into emerging markets for the week so far, up nearly 13.5% on volume. That's about average. Now today, this is not good. We managed to close up. We have filled candlesticks as this dollar strengthens. And if it begins to break out, it is not going to be good for emerging markets. Energy caught a bid. It's got to close above 52.93. It probably will. Volume's good. Not a good day today. So, no shock. We had a short covering rally. This is the first leg of a potential W formation. And that's why we didn't chase it yesterday. We expect a pullback and probably pull back in further. Let's watch for a higher low. If we don't get that higher low, we avoid it. Down volume was light today. Oil. We are back down into a trading range here. You can't buy oil. And I wouldn't buy the energy sector until such time as oil broke back out above this upper band of resistance. Gold. Is this updated? Let's go to the GLD. I never trust this end of day chart with gold spot. Here we go. Okay. So we're holding support here. And this is going to bring us to Norris's question. Why would NUGT or gold be up when the dollar is poised to break out to new highs? I think that the answer could be found in one word, and it's fear, and perhaps indecision. You're not seeing this market get bid up on big volume. Therefore, you have to conclude that you don't have a ton of new institutional money flowing into the major indexes. You have coronavirus, which maybe it was a false flag, an effort by the media to get people afraid so they'll click on links to get their advertisers buying more ads. Who knows? But there will be ramifications. You have purchasing managers that over the past couple of weeks certainly are not optimistic with regards to what the future brings, given the fact that media attention is what it is. So I think that China is a major problem on many fronts. A major problem in the fact that the supply chain, what China is, a major component of, is breaking down. You had Chrysler and Fiat come out, Fiat Chrysler, come out today and say that it's imminent. There's going to be a supply chain crisis due to the fact that you have us decoupling from China. You have the coronavirus in and of itself halting production of Apple's earbuds, whatever they are, for the music. I sound like an old man right now. There's a lot of damage being done over there. Tesla's closed a lot of its showrooms. So there is damage being done in the economy. And I think that you're seeing money, the smart money, rotate into the dollar. They know that at some point in time, I believe that there's talk now of, it's chatter, it's fly on the wall type stuff, of a June rate cut. And you have the smart money, which is betting that there will be more fear to come. Therefore, new money rotating into cash. You have the euro, which is just falling apart right now. that Brexit rally is all but done. So whatever is going to happen over there is going to happen, but it's certainly not good. So that money's finding its way over here into the U.S. dollar, into the U.S. stock market. It's not that it's smart money. It's just a place to park cash, and people believe that they believe that this type of price action is normal behavior. And it's not. And it's not going to end well. And as the reports come in of a slowdown in global macro GDP, Goldman Sachs this morning came out, put out a note. They're expecting a 2% drop in global GDP because of the coronavirus. That's huge. So what will the Federal Reserve, the central bank of the world, what must they do? They must print more money. And right now, I think the dollar, were it not for all the problems and woes around the world, finding a home in the US dollar because it's so deep and trusted, the dollar, if the Europeans had their act together, the dollar would be dropping off of a cliff. I mean, let's bring up, I believe it was reported yesterday let's bring up the Federal Reserve's balance sheet for this week. Let's see what those characters have been doing. Here we go. Okay. So here we are. There have been some busy beavers this week. This is as of yesterday. The balance sheet has risen for the second consecutive week. 4,166,707,000,000. Just shy of the recent highs. It looks as though we're going to go higher here. So I think that the gold market is finding a bid because they know what's coming. It's almost a foregone conclusion of what's about to happen. So I think that you have buyers in there, they're buying the dip on gold. And if you take a look at gold, you could argue that a lot of what you're seeing at current is technical in nature. Let's bring up the monthly GLD and I'll illustrate. So remember that we broke out last week. Well, the markets dove last month. I said last week we broke out. Last month we broke out. We broke out last month while the markets dove. And what do we normally expect after a breakout? We expect a retest. That is what I think is happening right now. I think what we're seeing is simply traders being OCD, pulling back, tapping what was resistance. Is it now support? Being reassured. And once we break out to a new monthly high, if we break out to a new monthly high, it's going to be game on. And we're going a lot higher. Norris, I agree. Maybe the beginning of shorts having fear in the UUP. Yeah, it could quite very well be some capitulation buying. And it's only going to get worse if we break out to new all-time highs. It's a valid point. I mean, where else is money going to go? Let's bring up the euro. We'll go to the FXC. We'll keep it simple. Let's see how that's looking. A disaster area. But I will note that the selling pressure, volume anyway, lightened up dramatically last month. Bullish reversal bar last week. This week we undercut. We're going lower here. Let's bring up the yen. Same deal. Bullish reversal bar last week, this week. We've already taken out last week's lows. Not pretty. Not pretty at all. All right, so let's go back. Oh, the one chart I want to take a look at, because I was looking at it earlier, and I've kind of been ignoring it of late because it just hasn't been performing. And that's silver. But this bull flag setup is really becoming interesting. So let's drill down here. Let's go to a daily view. Hate these Stokes. Directionless, sloppy. So I think we're stuck in a trading range here, but that weekly chart is setting up really, really nicely for silver. And here's the short ETF of China. Continues to weaken up here. And this is why we didn't want to chase it. All right, so I didn't go over Nugget. If anybody has any symbols they want me to review, I'll be more than happy to do it. I want to take a look at Nugget and UGAZ. First, we're going to go to a monthly chart of Nugget. So Nugget continues to retest the breakout point. Remember, we broke out here in December. January was a down month. We did a retest. We're retesting yet again. So what we need to do is update this. And watch for a breakout. I think a breakout, let's try to divine where that breakout point would be. A breakout above $34 to $35 per share would be very, very bullish for NUGT. Weekly view. Obviously, we're down on the week. We're holding support, though. Volume is rolling in lighter than average. Not loving the Williams percentage R. Let's go to the daily chart. Stokes is still correcting. This is why I don't want to add. This has got to get resolved. RSI hooked up today. Price, we closed off the highs of the day, but we did recapture the 50-day moving average and support, which is bullish. Volume was light. So we sold some covered calls today. I didn't want to go out until next week. The premiums on the covered calls or the calls going out to next week were not great. Traders are simply not interested in Nugget right now. So we need to wait for a correction in the market, ideally a pullback in yields, and then traders, especially on a pullback in yields, traders will start looking at Nugget and gold with a lot more interest, and you'll see the premiums on those options expand. Their implied volatility will expand because of demand for the call options. So that'll increase the premium that we're paid. So rather than going out into next week, I said, you know what? Let's just stay front week. Stay in this week. We'll scalp a profit at resistance. We sold the 32.50 strike price because we know there's a lot of resistance at that level. And the probability of us getting called out, I think was, let's go through it right now. I think it was 14% when I opened up the trade. So this is what I do. So here we have the February 7th strike going out to tomorrow. And the probability of closing out of the money, or meaning below 32.50, is 87.6%. So very strong odds that we're not going to get called away. I don't want the shares to get called away. If you're looking to generate huge cash flow with NUGT, then you go with a shorter, a closer strike price. But I don't want the shares to get called away. So I went deeper out of the money with a very high probability of the options expiring worthless. Anybody have any symbols that want me to go over at all before we say goodnight? And I'll go to UGAZ before I shut it down. Hey, John. Twitter is trading way above the third standard deviation Bollinger Band on big volume. Fill the gap, quick short, or is this chart too strong? Let's take a look at it, John. I don't want to use this chart. Let's use this one. Okay. So I think that we are probably going to pull back, but I would keep any short small, because it's a tale of two types of shorts. Let's bring up Tesla and compare the two for a second. All right, so we shorted Tesla here, but at that time we had RSI, and this is the reason why I kind of paused when I first looked at Twitter, because there's a lot more room to the upside on Twitter with RSI and Stokes too, whereas with Tesla, this was a no-brainer. We had RSI well above 90 and trading above the third standard deviation Bollinger Band. Twitter needs a little bit more finesse. What is the deal here tonight? Let's go to a weekly view. Man, I wish it would have hit this upper band of resistance here. This is not what I wanted. This is what I want. Okay. Now it becomes more interesting. So where we closed today was support back in September. Then again in October, then we broke. We have now retraced all the way back up effective today. Here's our daily chart, as you said, above the third standard deviation Bollinger Band. Let's overlay some weekly. Nothing. No weekly resistance. Let's drill down. So here's the morning gap. Horrible close. Close back down below support. Now resistance again. Stokes still look good. Let's get rid of RSI. Better. Here's what scares me, John. RSI looks so strong. I don't like the short, and I'll tell you why. I think that it is going to pull back. If this market fails to break and stays strong, you may just get an open down tomorrow. That'll alleviate the oversold condition on the Bollingers, and it could just trade sideways. And if the market stays strong, you could see the shares trade sideways and then resume the upward move. And honestly, a lot of what I'm concerned about deals with RSI. It's so strong. You do have a lot of resistance above here. Let's war game this out. Let's do a hypothetical. No matter what I say, you're doing it. You're going for it. And you're looking for a game plan on how to enter. All right, so I think that this can be shorted if they gap it up again tomorrow. Yeah, but thanks, Bob. I tend to agree. The weekly chart is strong and indicators are not as extended. Yeah. So, looking at it as a Bollinger Band trade only, no doubt about it, John, you have your point is 1,000% made. I still think that if you're a very quick trader, which I'm not, I'm the first to admit it, I overanalyze everything. So I wouldn't do this trade because I would have to see a surge higher, then short into it, and then be able to on a pullback, book my profits, move to the sideline, not my cup of tea. Because I just don't think, like you said with the weekly chart, and even with the daily RSI, it's just not saying, you know what, it could do exactly what it did here, right back here in April, right? You get the pullback, then all of a sudden it moves up higher and eventually rolls over. Or maybe it doesn't. It rallies up into the third standard deviation, Bollinger Band, consolidates, then moves up higher. So this is not an extreme overbought trade for me. And I think we're kind of on the same page with the analysis. And if they gap it down tomorrow and it holds 37.50, they're going to consolidate it and then they're going to press it higher and it's not going to be a short anymore. So it's a great pick. It's an interesting stock to discuss. But not my cup of tea. So I would pass. But thanks for bringing it up. I really do appreciate it. Anybody have anything else? Okay. Oh, I didn't go over UGAZ. You know, first before I leave this chart, John, because now you got me started here, I just want to go to the intraday chart. You're welcome, John. Just out of curiosity, I want to take a look at the 2-hour chart. Yeah, it's extended. I would avoid it. Okay, moving on. UGAZ. I really like this setup here. RSI is beginning to hook up. Stokes beginning to hook up. They're a coiled spring. Inside week so far on massive volume. This is churning. Shorts are trying to take it down. It doesn't want to go down. RSI pulling back, higher low. Good stuff. Stokes hooking up. Good stuff. We reversed on the day. Not so good. But it's expected. Intraday view. Let's go to a 4-hour. So really the chart to watch here is the 2-hour chart. I mean the weekly chart. Now we'll go to the 2-hour chart. Yeah, we ran right up and into the third standard deviation Bollinger Band. They sold it off. So we'll show patience here. And I'll defer to probably the 4-hour chart, looking for a breakout or a continuation move higher, I should say. Right there. So I like the chart on a weekly basis at least, and we'll look to add on strength. And that is it for tonight, folks. Thanks for joining in. Everybody have a great night, and I will talk to you tomorrow. Be well.